All right, let's dive in. We're taking a close look at Samsara Inc.'s third quarter performance for fiscal year 2025.
Exciting stuff.
We've got their Form 8K filing with the SEC, their press release, and of course, the detailed financial data.
Oh, yeah.
So we'll be exploring how this tech company, which focuses on, well, they call it the Connected Operations Cloud,
Right.
we're going to figure out how they're doing and what insights we can take away from their performance.
It's an interesting area because Samsara, they're not like your typical software company.
Oh.
They're really using the Internet of Things, the IOT, to connect physical operations, so things like transportation,
Okay.
construction, to the digital world. They provide real-time visibility for companies into what's actually happening on the ground.
So Samsara is basically attaching sensors to everything, trucks, bulldozers, maybe even those hard hats, right?
Yeah, you got it. All these devices are sending data back to Samsara's platform. And what's really amazing is the sheer volume.
Yeah.
We're talking over 10 trillion data points collected every year.
Okay, wow, 10 trillion. That's honestly more data than I can wrap my head around. So what's the big deal? Why should anyone care about all these data points?
Well, that's where AI comes in.
Yeah.
So Samsara is using AI to analyze all that data, looking for patterns and insights. Think about it. You can improve driver safety, reduce how much fuel you're using. You can even predict when a piece of equipment might fail before it actually happens.
All right, that's starting to make sense. But let's get down to business. How did Samsara actually perform in Q3?
Well, according to the 8K, they had a revenue of $322 million for Q3.
Okay.
That's a 36% increase compared to last year.
Wow.
And their ending annual recurring revenue, or ARR, hit $1.349 billion.
All right, hold on, back up for a sec. What exactly is annual recurring revenue? It sounds important, though.
You're right, it's a key metric for subscription-based businesses like Samsara. Essentially, ARR gives a snapshot of the predictable revenue they have coming in each year.
Got it. So a 35% jump in ARR means things are looking pretty good for them,
Yep.
especially with all this talk about economic uncertainty.
That's right. Samsara seems to be defying the odds. And there's one thing in their report that really stood out to me. They now have 2,303 customers, each contributing over $100,000 in ARR,
Really?
a 38% increase from last year.
So they're attracting those big spenders. What does that tell us about Samsara's strategy? Why focus on these larger clients?
It seems like they're strategically targeting larger enterprises with complex operational needs. These companies are more likely to benefit from the in-depth data analysis, the insights that Samsara's platform offers.
Makes sense.
Plus, landing these bigger contracts can provide a more stable revenue stream, which is particularly important in a potentially volatile economic climate.
That makes a lot of sense. But we've got to address the elephant in the room, profit. Are they actually making any money with all this growth?
Well, while they're still operating at a loss,
Okay.
it's important to look at the context. Their losses are actually decreasing year over year. And a big chunk of their expenses is going towards stock-based compensation and research and development.
So they're pouring resources back into growing the company. Is that a good thing or a risky move?
It really suggests Samsara is prioritizing long-term growth and innovation over immediate profitability. They're essentially betting big on the future of the connected operations cloud, and that's reflected in their spending.
Okay.
It's a common strategy for tech companies, especially those aiming to disrupt industries.
Okay, so they're spending big, but their revenue is also climbing steadily. What about the cash flow situation? That's going to be a crucial factor for a growing company like Samsara.
You're absolutely right, and this is where things get interesting. Samsara achieved a 10% adjusted free cash flow margin in Q3.
Hold on, explain that one for me. What exactly does free cash flow mean, and why is a 10% margin so significant?
Sure. Free cash flow is basically the cash a company has left over after paying for its operating expenses and capital expenditures.
I see.
A healthy free cash flow indicates that a company can reinvest in growth, pay down debt, or even distribute dividends to shareholders.
Okay.
A 10% margin, especially for a company in a growth phase like Samsara, suggests they're managing their finances responsibly and are generating cash from their operations.
So despite not being profitable yet, their strong free cash flow suggests they're on a solid financial footing.
Precisely. This is one of those details that really caught my eye. It suggests Samsara is in a strong position to keep investing in their platform, which could potentially accelerate their path to profitability. They're not just burning through cash to chase growth, they're generating it as they grow.
So we've got strong revenue growth, a focus on high-value customers, and a positive free cash flow. That sounds like a pretty compelling story. But are there any red flags we should be aware of?
Well, there are always risks, especially in a rapidly evolving market like this one.
Yeah,
Competition is fierce, and while their current trajectory is promising, there's no guarantee Samsara can maintain this pace of growth in the long run.
that's a fair point. But even with those caveats, Samsara's performance in Q3 paints a pretty optimistic picture. They seem well positioned to capitalize on the growing demand for connected operations solutions.
Absolutely. Their investment in AI signals their ambition to be a leader in this space, and
Hmm.
if their vision plays out, it could be a game changer for industries across the board.
And that brings us to a question for you, our listener. Samsara is betting big on the future of the connected operations cloud and the transformative power of AI. If their vision becomes reality, how might this technology reshape your industry in the coming years? What opportunities or challenges could this present for businesses like yours? It's something to ponder as we continue to explore Samsara's performance. Stay tuned for part 2, where we'll unpack even more insights from their Q3 results and dive deeper into the potential impact of their AI initiatives. We're back for part 2 of our deep dive into Samsara's Q3 performance. Before we move on, I want to circle back to something you mentioned earlier, that 10% adjusted free cash flow margin. That really jumped out at me. It seems like a lot of tech companies, especially those focused on growth, aren't always so good at managing their cash flow.
Yeah, that's a great observation, and it's something I find encouraging about Samsara's approach. That 10% margin, it really suggests a level of financial discipline you don't always see. It indicates they're not just spending recklessly to grow as fast as possible.
Okay, so they're managing their cash wisely, but let's go back to their revenue for a moment. They reported 36% year-over-year growth for Q3, but also mentioned a 35% growth in their ending ARR. Why the distinction? Is there something tricky going on here?
Not at all. It actually highlights an important nuance in how Samsara recognizes revenue. Remember, their business model is based on subscriptions.
Right.
So even if they sign a huge deal in Q3, the revenue from that contract might be spread out over the entire length of the subscription.
Ah, I see. So the 36% year-over-year growth reflects the revenue they actually brought in during Q3, while the 35% ARR growth gives us a bigger picture view of how their business is growing overall.
Exactly. And keep in mind, both figures are pretty impressive, especially when you consider the talk about a potential economic slowdown. A lot of analysts were predicting a dip in tech spending.
But Samsara seems to be bucking that trend. What do you think is driving their success in what could be a challenging environment?
Well, there are a few factors that could be at play. First, Samsara's focus on physical operations. It gives them a unique advantage.
Okay.
Think about it. Companies in sectors like transportation and construction, they can't just pause everything because the economy's a bit shaky. These industries need to keep moving, literally.
That's a good point. Those projects still need to get done, so the demand for solutions that can improve efficiency and safety remains pretty constant.
Right. And that's where Samsara comes in. They're offering tools that can help companies optimize their operations, regardless of the broader economic climate. Secondly, Samsara's emphasis on data-driven insights. This resonates with customers.
Yeah.
In an uncertain economy, businesses want to make smart decisions based on real-time data, and Samsara gives them the power to do just that.
So they're not just selling gadgets, they're selling a way to make better decisions and potentially save money, which is even more appealing when things are a bit unpredictable. But let's face it, growth is great, but eventually investors want to see profit. What's your take on Samsara's path to profitability?
That's the million-dollar question, isn't it? Remember, Samsara is still in a rapid growth phase. They're investing heavily in research and development, expanding their sales and marketing efforts,
Right.
and constantly improving their platform. All of these things require significant upfront investment, which naturally impacts their short-term profitability.
So are they taking a gamble by prioritizing growth over immediate profit?
Well, it's not uncommon for tech companies to follow this strategy. It's about capturing market share and establishing themselves as leaders in a new space. Of course, there are risks. If their growth slows down, or they're not able to turn those investments into profit down the road, the path to profitability could get much longer and more challenging.
It's a balancing act for sure. It's exciting to see their growth, but it's also important to consider the long-term sustainability of their business model. But their strong free cash flow suggests they're managing their finances responsibly, right?
Absolutely. Their free cash flow is a key indicator that they're generating cash from their operations, even while they're still investing heavily. That gives them flexibility to keep growing and potentially reach profitability faster than you might expect just by looking at their current earnings.
Okay, so there are reasons to be optimistic about their future, but it's not a guaranteed slam dunk.
Exactly. It's still early days for Samsara, and the next few quarters will be crucial for them to demonstrate that they can maintain this momentum and truly deliver on their ambitious goals.
This is why we love doing these deep dives. It's not just about looking at the numbers, it's about understanding the story behind those numbers, what they tell us about a company's strategy and potential. Now, let's talk about Samsara's investment in artificial intelligence, or AI. It seems like they're really pushing the boundaries in this area. They mentioned in their press release that they're now collecting over 10 trillion data points annually. That's a mind-boggling amount of information. But how are they actually using AI to create value for their customers?
AI is being integrated into Samsara's platform in a variety of ways. One example is how they use AI to analyze video footage from their cameras, to identify potential safety hazards, like distracted driving or improper equipment usage.
So it's like having an extra set of eyes constantly monitoring for risks.
Precisely. And it's not just about reacting to safety issues after they happen. Samsara is also using AI to predict potential problems before they occur, such as equipment failures or maintenance needs.
That's incredible. It sounds like they're shifting from fixing things when they break to preventing things from breaking in the first place, which could lead to huge savings and increased efficiency.
You're absolutely right. And the applications go beyond just operational efficiency. Samsara is exploring ways to use AI to improve sustainability. For instance, they're using AI to optimize routing and logistics, which can help reduce fuel consumption and emissions.
It's fascinating how AI can be applied to solve real-world problems in so many different ways. But we hear a lot of hype about AI these days. Is Samsara's focus on AI just a marketing tactic, or is there real substance behind it?
That's a fair question. It's still early days, but I believe AI has the potential to revolutionize physical operations. The key is to focus on practical applications that address real business needs and challenges. And from what I've seen, Samsara seems to be taking the right approach. They're not just throwing AI at every problem, they're being strategic and thoughtful about how they integrate it into their platform and demonstrate its value to customers.
So it sounds like they're focused on delivering tangible benefits to their customers, not just chasing the latest AI trends for the sake of it. That's a good sign.
Absolutely. And that's one of the reasons I'm cautiously optimistic about their prospects. But it's important to remember that challenges and uncertainties still lie ahead.
Of course. The tech landscape is constantly evolving, and there's no guarantee that Samsara will maintain this impressive momentum. But their Q3 performance certainly gives us a lot to think about.
It does. It's clear that Samsara is at a crucial point in their journey. They're experiencing rapid growth, investing heavily in innovation, and demonstrating a strong financial foundation.
But the road ahead remains uncertain. The next few quarters will be critical in determining whether they can sustain this trajectory and truly revolutionize the world of connected operations.
For those who want to dig deeper into Samsara's financials and future plans, their investor relations website is a great resource. You can find it at investors.samsara.com.
That's investors.samsara.com for all the details. But before we wrap up part 2, I want to leave you with a question to ponder. How might the rise of AI and the connected operations cloud impact your industry? As we head into part 3, we'll explore some potential scenarios and discuss the implications for businesses of all sizes. Stay with us.
Welcome back to the final part of our deep dive into Samsara's Q3 performance. We've covered their impressive financials, their strategic focus, their ambitious AI plans. Now let's zoom out and consider the bigger picture. What does Samsara's success tell us about the larger trends shaping the business world? It's a great question. It really feels like we're at this turning point where the physical world and the digital world are merging, and Samsara is positioned right at the center of that convergence.
It's like we're witnessing a fundamental shift in how businesses operate. Data is no longer an afterthought. It's becoming the driving force behind decision-making.
Exactly. And Samsara is providing the tools to not just capture that data, but to analyze it and use it to make real-time decisions. That's a powerful proposition for businesses looking to improve their efficiency, their safety, their sustainability.
So Samsara's success isn't just about one company's performance. It's a glimpse into the future of how all businesses might operate in a world where data is king. Remember, in part 2, we left our listeners with a question. How might the rise of AI and the connected operations cloud impact your industry? Let's brainstorm some possibilities.
Okay, sure. Let's say you're in the construction industry. Imagine having sensors on all your heavy equipment, bulldozers, excavators, cranes. tracking everything from location, fuel consumption to engine performance, even, operator behavior.
That would give you an incredible level of insight into your operations. You could optimize routes to minimize fuel waste, reduce idle times. You could even anticipate maintenance needs before a piece of equipment breaks down, saving time and money.
Exactly. And it goes beyond just efficiency. Think about safety. These sensors could detect unsafe conditions or risky operator behavior. Maybe they trigger an alert or even automatically shut down a piece of equipment to prevent an accident.
That has the potential to significantly reduce workplace injuries and create a safer environment for everyone on the construction site. It's amazing to think how this technology could change the way we approach construction projects. But let's shift gears for a moment. Imagine you're running a food delivery business. How could Samsara's technology be applied in that industry?
Well, you could track your entire fleet of delivery vehicles in real time, ensuring on-time deliveries and optimizing routes for maximum efficiency. Customers would be happy and you'd be saving on fuel costs.
That's a game changer for customer satisfaction and for the bottom line. And you could even take it a step further, right? I'm thinking temperature sensors to monitor the condition of perishable goods in transit. No more worries about spoiled food or unhappy customers.
You're exactly right. Quality control becomes much more precise, more reliable. And let's not forget about the healthcare industry. Imagine hospitals using connected sensors to track medical equipment, ensuring it's always available and in proper working order.
Talk about life-saving applications. That could streamline operations, improve patient care, potentially even save lives. It really seems like the possibilities are endless. It reminds me of how the internet transformed our lives. Once it became widespread, it changed the way we work, communicate, even think. The Connected Operations Cloud could have a similar impact on the business world.
I think that's a great analogy. And just like the internet, this technology brings both incredible opportunities and new challenges.
Let's talk about some of those challenges. What are some of the potential downsides of this hyper-connected future?
Well, one of the most pressing concerns is data security. When you're collecting such vast amounts of data, you become a prime target for cyber attacks. Safeguarding that data becomes a top priority.
That's a huge responsibility. Businesses need to be incredibly diligent about how they store and protect this sensitive information.
Absolutely. And then there are the privacy implications to consider. When you're tracking vehicles, equipment, potentially even individual employees in real time, you need to be mindful of their privacy rights. Finding the right balance between leveraging data for good and protecting individual privacy is crucial.
It's a complex issue for sure. And there's also the concern about job displacement. As automation increases, some people worry that jobs will be lost.
That's a valid concern. It's something we need to be aware of as we transition to a more automated future. However, history has shown us that technological advancements often create new jobs and opportunities that we couldn't have even imagined before.
I agree. It's about adapting to change, learning new skills, and embracing the possibilities that technology creates. The jobs of tomorrow will likely require different skill sets than the jobs of today.
Education and training become even more crucial in this environment. We need to equip the workforce with the skills they need to thrive in a technology-driven economy.
So it's not just about embracing new technology, it's about investing in people and providing them with the resources they need to succeed in this changing landscape.
I couldn't agree more. And I think that's a key takeaway from our exploration of Samsara. Their success isn't just about their technology, it's also a testament to human ingenuity, adaptability, and the power of investing in both technology and people.
Well said. We've analyzed the numbers, explored the trends, and even ventured into some hypothetical scenarios. But ultimately, the future is what we make it.
The Connected Operations Cloud is a powerful tool. It has the potential to transform industries and reshape the way we work. It's up to us to use it wisely and responsibly.
And that's what we aim to do here on the Deep Dive. We don't just present information, we encourage you to think critically, ask questions, and engage in thoughtful discussions.
As you go about your day, consider how the trends we've discussed might impact your life, your work, and the world around you.
Because the future isn't something that happens to us, it's something we create together. And on that note, we'll wrap up this episode of The Deep Dive. Thank you for joining us on this journey of exploration and discovery. Until next time, keep diving deep and stay curious.